Jean-Michel, you're Managing Director and Chief European Economist for Standard & Poor's based in Paris. There's been a severe recession. Where do we stand today?
Well, as far as Europe is concerned, you're right to say that the recession has been the most severe since World War II. What we are seeing at the moment, if you look at the high-frequency indicators, especially in the manufacturing sector, we are seeing Europe as a whole pulling gradually out of the recession. Manufacturing output has increased again since the middle of last year, and that's been primarily due to a sharp recovery in world trade and more specifically in emerging markets. Now, that being said, obviously that recovery in Europe that I was describing is very uneven. The locomotive of that recovery has been Germany, followed by France and the Scandinavian economies as well. They've been able to take advantage of the recovery in world trade. Obviously, Germany is a very export-oriented, highly competitive economy. It's also the largest economy in the Eurozone. Those factors help to explain, along with the fiscal stimulus that was injected in the past year in our economies, why that recovery has finally materialized. But again, it only affects the northern part of Europe and the UK. The southern part of Europe remains stuck in recession.
Where do we see this fragile recovery going then? We hear the word double dip. Is that a real concern?
It is a real concern, although in our opinion, the risks of a double dip in Europe are overstated. Certainly the fiscal retrenchment that is going to take place across Europe as governments need to reduce their deficits and eventually their public debt, that fiscal retrenchment is going to limit or put a lid on the growth prospects in all economies, but more particularly the southern part again. At the same time, we observe that retrenchment in economies like Germany or France is about 1% of GDP next year, equivalent to about 1%. We think that this is still growth compatible. We therefore expect not a double dip, although we recognize that the risks are certainly there, but rather a half-speed recovery and also a two-tier recovery. Again, Spain, Portugal, Greece, Ireland, still in a very slow growth mode or a recession environment next year, and a gradual pickup slightly below 2% for real GDP growth in the countries where indeed the retrenchment is going to be a bit less severe.
So which regions in the world do you see leading the way?
Well, clearly, if we are currently where we are in terms of that recovery in manufacturing that I was describing, this is primarily due to emerging markets, and especially Asia, where a combination of strong growth and very aggressive fiscal stimulus in the past 2 years have helped those economies staying away from a recession and indeed enjoy positive rates of growth. So those economies are well positioned to remain the locomotive of the world economy at large.
How about the currency situation? Will the dollar, pound and euro stay the way they are, or can we expect the situation to improve?
The currency situation is one that needs to be followed very, very carefully in the next months and quarters. Remember that the imbalances on the foreign exchange markets prior to 2007 were a major factor behind the crisis that started thereafter, simply because some currencies were clearly undervalued, especially in emerging markets, causing their central banks to accumulate a lot of foreign exchange reserves, which in turn were reinvested in the developed markets. Today, we are at pretty much the same stage again. We are seeing a significant rise in foreign exchange reserves in emerging markets, led by China. And certainly, there is an argument in favor of saying that the RMB, the Chinese currency, and a few others are still undervalued. To respond more specifically to your question about those three key currencies, we see the dollar, in our opinion, continuing to weaken. We see sterling remaining pretty much where it is today, highly, in other words, very competitive, which is a big help for UK exporters. UK exports have been growing at their fastest rate since the early 80s. And on the other side, obviously, the euro probably strengthening a bit more. The monetary policies in the euro area are kind of different from those followed in the Anglo-Saxon environment, if you want. Quantitative easing, printing money, is not really what the ECB is doing at the moment. And we think, therefore, that the euro is likely to strengthen a bit, which is not good news for European exporters, but it's certainly, in our opinion, a likely development.